Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. Hello everyone, welcome to another Tuesday webinar. Now, where do we start? We have to start with one of the biggest, most profitable companies in the world. We have to start with Apple. They have launched a new savings account. They've taken a big dive into the banking sector, and they're offering a 4.15 savings on a high yield savings account to its new members. Now this is not new to the likes of Apple. Apple have been giving cash back to people for years. People who have the wallet, they have their card, and now they've jumped in massively here. So Apple have joined and teamed up with one of the biggest companies in the world, in Goldman Sachs. So between the two of them, this is absolutely huge. Now, to put this into perspective, what Apple are going to be giving you is, if we look at JP Morgan, so JP Morgan are the biggest bank in the US, and they're offering savings at 0.01%. Bank of America are second in the US, and they're offering, as we can see, 0.01, 0.02, 0.03, and 0.04. So you can see the disparity there between the two of these accounts. It's absolutely phenomenal in the likes of the US. So how will this affect the likes of the banking sector, so on and so forth? So regional banks are crying out for deposits. That's what they need to come in the front door so they can actually keep the lights on. And this is something that a lot of these regional banks have been affected. They haven't been doing very well. Now, when you look at Apple, Apple is one of the biggest companies in the world. It has one of the most profitable companies in the world. It also has an app that people are on 3 hours a day. So on average, Apple iOS users are on their phone about 3 hours. So it means then they have everyone's data. They have that trust factor. And it also means now that they're given one of the highest rates of interest in the likes of the US. Now, there are other companies out there that are actually given higher yields, online banks, but they don't have that trust level as Apple do. So one of the key things we need to look at now is, will this have a knock-on effect with the other banks? Will this have a flood of cash going into Apple? And how Apple can actually monetize this, and so on and so forth. And how they're going to monetize this is by giving cash back to users that are not Apple, and actually selling them iPhones, selling them MacBooks, selling them all the other products that Apple have here. So this is like going to a shop and buying cigarettes, where you're actually, the shops don't make any money on cigarettes, but what they do is they sell sweets, they sell Coke, they sell all the rest of the stuff there for you guys, and that's what happened. And that's what Apple are trying to do here. They're trying to bring in an influx of new clients, new customers that they haven't reached before. And generally, once Apple put their mind to something, they generally hit the nail on the head, and that's something we have to look at. So we have earnings coming up on Apple, and earnings are coming out on the 4th of May. So from there, we will see probably a jump to the upside of what's going on, but also what we'll see is we'll actually start to see an influx of new clientele coming in. So this won't affect them until the next earnings, the earnings after that. But what we have to do is keep an eye on this space. Now, if we look at some of the other banks out there, it's likes of the Wells Fargo of this world. Now we can see we had Wells Fargo moving sideways. And then with what happens in the likes of SVP, we've had a massive drop over this in the last couple of months. Now, yes, their earnings have come out pretty good, 8% and 3% up, which means then they've had a little bit of a jump to the upside. So they came back down to this floor and then popped up. Also, we have other banks in there that have had similar sort of stories, but what we have to do is we have to look at the likes of Goldman Sachs, who have partnered with the likes of Apple. And all of a sudden we can see that they're up $3 already on the pre-market earnings. So the same as all the rest of the banks, they had a little bit of a sell-off here. They didn't quite hit the same low as the likes of Wells Fargo, and they are popped up a little bit, and earnings are coming out today after the market has closed. So again, we don't know how this is going to affect them today, but you would expect the share price to go up on the back of this news. Now, how far, we have no idea, but it's next quarter and the quarter after that is where we will start seeing the impact of this deal with the likes of Apple. So they're sort of things that we're looking at. They're sort of things that you can potentially look at and hold on to. Is the likes of Goldman Sachs going to continue to the upside? If we look through the pandemic, they've had this massive run, then they had this drop down, and as you can see, over since 2009, they've had 1, 2, 3, 4 bad earnings. So in the grand scheme of things, they have done pretty well over that particular time. Now, is this going to be profitable for them, or is this going to be sort of negative for them? And again, time will tell with what's going to happen over this short period of time. And then long term, you would expect this to be pretty profitable for both sort of parties. Now, also what we're going to do is we're going to have a look at, say, the Nasdaq. So we're going to have a quick look at these indices and see what's sort of going on. We have earnings that are starting to come out on the likes of these, and what we sort of expect from the likes of this. So we can see that we've had a nice little trend to the upside here. Now, we do have a trade here open, but this is not something that I would have taken. It's not something that I don't see this as a high probability trade. Why? Because the phase 2 has here is just being sideways. So this for me is not a phase 2. It's moved sideways. It hasn't come back correctly. I wanted it to come back to this level here. And if it came back to that level, that's where I'm looking to buy. Or even if it came back to this horizontal, then I would be much more interested in this. But I know some of my clients were looking at that to the upside, so we popped that trade in there, but it's not something I took on my own money. Now, if we look at the likes of Netflix as well, so Netflix has earnings coming out today as well, so that's something we need to keep an eye on. If we look at the pre-market is ever so slightly down on the likes of Netflix as well. So there was loads of sort of earnings. We're in the middle of earnings season starting to come out now. So just make sure if you're looking into buying some of these stocks, if you're looking into something that you're looking and seeing, is earnings expected to be good? Is earnings expected to be bad? If we look at Tesla also is slightly down on the open so far on the pre-market. If we have a look at this, also their earnings are coming out tomorrow. So absolutely make sure when you're looking at the likes of this, you're jumping into these stocks with the mindset of earnings is coming up very, very shortly. We have Apple's earnings, which are coming out on the 23rd. Meta is coming out on the 23rd. Facebook, 23rd. Amazon, 23rd. Google, 23rd. Netflix today. Tesla tomorrow. McDonald's, 23rd. So 23rd is a big day for the likes of earnings. Let's have a quick look at Nike as well. Nike's already had its earnings, and its earnings were massively successful. So anyone who has been following me for a long time, this is a stock I touted from the beginning of the year to be quite profitable, and anyone who bought it anywhere around here. Let's have a look at Nike. So Nike is something I touted from the beginning of the year. So 2023. So anyone that bought this here, you're up slightly on Nike, so it would have been anywhere around here, and at the minute you're about 7% up already. So the stocks that I touted for the beginning of the year were Apple, Nvidia, Nike, and Crocs. They were the 4 ones that I touted for the beginning of the year, and Nike is doing pretty well at this present moment. But make sure when you're looking at the likes of this, you're taking into consideration what's going on. Having a look at the banking sector. Is this going to be made worse by what Apple is doing? Are we going to see an awful lot of withdrawals from the banks jumping over to the likes of Apple with this high yield? And in my opinion, we will see a certain amount of people jumping across there because of this. And then lastly, is this going to be profitable for Apple over this period of time, and Goldman Sachs? So is it worth jumping in both of those in the near future? Thanks everyone. Hope you have a lovely day. Bye bye.